I wanted to provide an update on my Nvidia short position. As you might recall, if you watched any of my other videos, I started shorting Nvidia 3 months ago and have provided a video updating where the stock's moving and the status of my short position at the end of each month. And we are at the end of August, so I wanted to provide a new update. This past week, the biggest story out there was the Nvidia earnings. There was actually some watch parties that people got together and watched. I know why. I certainly got together with a group of people on stonks, and it was really fun. It took a lot of energy, by the way. It seemed like uh, the predictions and the analysis really hit a peak. Now, the company, I'd like to go through it, evaluate it, value the company, and then share with you what I plan to do with my short position, plan to do with this stock. And as always, this is not financial advice. I don't recommend you short Nvidia. I don't recommend you buy, hold, or sell Nvidia. Now, the company is still a very large cap company. It's $2.93 trillion of value. That's a lot of value. Looking at their revenue, they're a $96 billion revenue company. Now, I happen to believe that semiconductor is cyclical. I think a lot of people would agree. Some people would argue that Nvidia is not going to be that way, that they're going to keep growing because they're going to build out the AI universe. And that might be the case, but it would be a rarity. And I think it's beginning to show up that their growth is really going to plateau and I believe decline. And I'm going to show that a little later. They are very profitable. This is a very uh, a likable company, very valuable company because they are growing, they're profitable, and they generate free cash. That is most definitely the case. Their P is a little high this year at 55. Next year, it's supposed to come down to 35, which is still quite high. But since they're growing, I think they deserve it. There's a strong buy by analysts, but it's a little bit of a group think that's going on out there. It just seems like, especially 6 months ago, 3 months ago, the whole kind of media universe was so in love with this stock. But the stories are changing. What I've heard over the last few business days is, media personalities like Jim Cramer really pump the brakes on Nvidia. He's already saying that the stock's overpriced, which is really incredible because he was one of the biggest cheerleaders of Nvidia. But if you go through other media personalities, I think the Nvidia is incredible, and we think it's going to be worth 3 or 5 times more. Story has really faded. We'll see how the media treats this company over the next few weeks. I happen to think that as we go through the next 2 to 3 weeks, how the stock behaves is going to determine the next year. Because if some large investors leave the stock, it's really going to open up the floodgates. If a few large investors enter the stock, I think the stock could really rally. So the next couple of weeks would be really interesting. We'll see how it goes. When we look at them financially, they're just an excellent company at the moment. They have really grown their revenue. Their growth has just been incredible. But it's not about where you're growing now, or I should say for the past 12 months. It's what are you going to do over the next 12 months? So I'm going to address that. I have got a forecast of the revenue that I'm going to show a little later. And their balance sheet's excellent. They have more cash than debt, a lot more cash than debt. They're going to buy back shares, which is a positive thing. Now, on the buyback, it's always positive for companies to buy back shares, but they tend to do it when it's getting later in their product cycle, their innovation cycles. And here's my point is if you had another great idea coming, you would keep that cash because you're going to need it to build that idea. But once your current idea is pretty much kind of playing out, you start returning that capital back to investors in the form of buybacks. A great example is Apple. Apple hasn't created a new product in a long time. I think the Apple stock is undesirable to me for that reason. That what's next? You're going to keep making the iPhone a little prettier, change the colors, have new commercials, and that's it. It seems that that's the case with that company. And a signal is that they buy back shares to prop up their stock price. Nvidia buying back shares, I think, is actually a sign for me that no, that's not what you should be doing if you're an incredibly high growth company. You should keep that cash and keep the growth going. So that was interesting to me. Cash flow is excellent. As we look at cash flow, the margins on their product are really high, and I put that into my evaluation. Analysts have been in love with Nvidia. 38 analysts cover it. Who doesn't cover Nvidia? And they say that the stock is discounted by 21%. The market disagrees, and the market has marked down the stock recently. But there was, over the last, I would say, 2 to 3 weeks, there was an upward run that has since faded. It faded a little bit this week, actually a lot this week. But for a couple of weeks, I saw the stock really rally. The current year, it's expected that they have earnings per share of $2.79. It really grew from last year. And if you look at previous years, this is what I talk about in the cyclical nature of this industry is not too long ago, they weren't making a whole lot of money, and they may return to negative growth, which is the case in 2019. It's a cyclical industry. It wouldn't be a surprise that a lot of these hyperscalers bought too many GPUs and they say, hey, we're not going to buy for a while. And you see a negative growth year, maybe in 25 or in 26, and it really changes its valuation. I'm expecting that. I can't tell you if it's going to be 25, 26, or 27. One of those years is going to have negative growth, maybe 2 consecutive years since there were so many GPUs bought from Nvidia. We'll see, but I'm going to take this into account into my valuation. At the current stock price, I believe that Nvidia is still priced 37% too high. It's being priced at a premium of 37%. And I get to that conclusion by setting up a cash forecast that I expect from Nvidia and then getting a net present value of those cash flows to today's value. I also look at earnings per share, do my own calculation there. I primarily use free cash flows as the valuation method, but earnings per share is a strong influence. Now, when we look at cash flows, I wanted to point out that I'm starting with their first half of 2024, and I'm multiplying that times 2, and then I'm growing it by 25%. I still think that they're going to have growth in free cash flows in the next 6 to 12 months. And I'm setting up a favorable forecast. I want this to be as positive, favorable for Nvidia because I'm shorting. I just don't want to. I don't want to start with the expectation that it's super overpriced and my numbers give me a number that proves that. No, I actually want to try to prove the other, which is, hey, could this stock really be worth what it's worth and maybe worth even more? So I'm growing year 1, year 2 aggressively by 25%, which is a very high free cash flow growth rate. But I'm expecting the company is going to plateau their revenue and actually have competition with alternatives, especially as the hyperscalers have bought many of the GPUs they need. And at that point, they don't have to buy anymore. So maybe they're buying for other use cases that could use AMD technology. It could use competitive technologies, even from the likes of Intel. So I'm expecting competition into the picture, sales to plateau, and I actually expect for cash flows to come down in years 3 and 4 by 15%. Again, they're going to reach a very high watermark of free cash flows in year 2 in my forecast. All these cash flows look great. The amount and terminal value is going to be pretty high. I'm going to grow terminal value by 4%, which is a high growth rate because, again, I believe that semiconductors are cyclical, but I'm still going to be as optimistic as I can be in this forecast. I'm going to discount by 8%, which is very reasonable quality balance sheet. And the current net present value of all those cash flows is $1.387 trillion. I'm going to add the cash on the balance sheet, take away debt. I only get to $1.4 trillion of value, but the market cap is $2.9 trillion. So based on cash flows, this stock is priced at a premium of 52%. Earnings per share get us to a 7% premium on the stock. If I base it on a PE of 36 and a growth rate of 10%, again, those are optimistic numbers. I could easily say the PE should be 25 or 24 because I'm going to show you that their growth rate is actually going to decelerate and it's going to plateau, and eventually you'll see some negative growth. In the next 2 to 3 years, I expect negative growth. When that happens, holy smokes, look out. The stock's going to drop. So having a combination of the two, I put more weight in free cash flow. I think that free cash flow always yields the true value of a company, and earnings per share is a strong influencer at 1/3 of the weight. I get to a 30% premium on the stock. How did I get to that cash forecast that I just showed you? And what is my expectation for NVIDIA's revenue going forward? Those are really the pieces of information, or I guess the projections that are really going to dictate where the stock price is going to go. What I've taken is the historical information data that NVIDIA has provided. The most recent quarter is Q2 of their fiscal year 2025. They have a fiscal year, I believe, that ends January 31st. So this is the quarter that just ended is in their fiscal 2025. And they reported that they had $30 billion of top line revenue, which was, if you compare that same quarter to the same quarter the year prior, 122% growth, phenomenal. But the sequential growth from the previous quarter was only 15. When you compare those numbers to where they were at previously, when they really just caught fire a year ago, the numbers were quite drastically different. The sequential was 88%, 100% moving to 200%. And you see how sequential growth is really coming down. Now, the company guided, this is a number from Nvidia, 32.5 billion is going to be their Q3 revenue number. So when we put that number into this little spreadsheet, we see that year over year growth is going to drop down to 79% from 122%. That drop may be psychologically difficult for a lot of investors. Whoa, what happened to growth? How come it's dropping so quickly? Sequential growth is only 8%. Again, this is Nvidia's number. So as investors get their heads around, they're sequentially growing only 8%. I expect that Q4 of their current fiscal year is going to be in the neighborhood of 34 billion. And that's probably a little optimistic. Again, their year over year growth would drop to 54, sequential growth 5%. Q1 of 25, which would start on February 1st of 25, I think their revenue is going to be around 35 billion. And again, the growth rate keeps dropping, sequential growth 5%. And I believe that in the middle of 25, they're going to plateau. They're going to stop growing sequentially. They'll still be able to show a growth rate in that quarter compared to the prior year. But I think by this point, investors will see that, hey, this is just going to be a normal, high, large technology, moderate growth stock. And a lot of I would say the fantasy valuations will leave the room. It'll now be based on, okay, cash flows are probably not going to grow anymore. And maybe the cyclical nature of this industry will begin to show up. So that's what I'm looking at from an information perspective. This section of the spreadsheet is completely my expectation, but this section of the spreadsheet is provided by Nvidia. So these are numbers that are real. These are the numbers that I've estimated based on my best prediction. And this is a realistic prediction. I think it's very realistic to see them plateau. And I think it's realistic to see that they're going to have negative growth in 12 to 24 months. And psychologically, that's going to be really tough on investors. We'll see how the stock behaves at that point. The desirability of the Nvidia business is really high, and that's never been in question. Nvidia most definitely is a company that has very strong barriers of entry. They have the best accelerated computing technology in the marketplace, and they're in high demand. That's most definitely the case. I've been a semiconductor investor for a long time. I think it's a very desirable industry. Semiconductor companies have their technology patented, and then it prevents other competitors from duplicating what they do. And that's the case for Nvidia. They're definitely a very desirable company. It's never been about that. The company is not the stock price, and the stock price is not the company. Those are two different things. And the company most definitely is a great company. If you value a company above $1 trillion, it's a great company. There's no ifs and buts about that. My only point that I made with my shorting is the stock price is unrealistic. It's just completely unrealistic, which is why I shorted. And I also shorted the stock so that I could put capital at risk and really put myself in a position to learn something. If I lose money, I paid a price for that lesson. If I make money, I gained and I got a lesson out of it, which is, I'm seeing the analysis, I'm seeing my best estimate, and I'm going to trust it. And I'm probably going to be able to calibrate and sharpen my skills as an investor as a result. So let me go over where I'm at with my short position. I started the short position at the very end of May, and it's roughly around this point that you're seeing on the graph. And this is the stock price. It's currently trading at $119 per share. My average cost base is $115 per share. So the current the stock price since I shorted the stock has really moved. When I first shorted, I thought, whoa, I really nailed it. It went down a little bit, but then it rallied up. So I was like, oh boy, here we go. I've got that 30% maximum, right? So if it goes up more than 30%, I'm going to get out of the position. It's just something that it was a wrong thesis that I had. Get out of it. Tip my hat to the stock market. Thank you for the lesson. And I'll make another video and share that with you and say, hey, this is how I was wrong. This is how much money I lost. But at a certain point, it really went to the downside. And I think the next couple of weeks are going to tell us what is it going to do. The last earnings call was a little ahead of this number or this point where I shorted the stock. So they actually announced their earnings like a week prior to that. And I think over the next 2 to 3 weeks, we'll see where the stock goes, if it goes up or if it goes down. Right now, I'm sitting at a 3% loss on my short position. I actually chickened out going into their earnings. I was hearing a lot of, I think, optimistic, bullish comments, and I took a few shares and I closed them out. And I took about $1,200 of capital off the table, and actually about $2,000 of capital off the table, and lowered the amount of capital at risk. So it's kind of funny, but hey, I'm still got a short position out there. Maybe I'll add some shares going forward. I don't know. I'm not ready to make a decision just yet. But I think the story on Nvidia is still the same to me. It's a stock that is incredibly exciting, but if you study the fundamentals, it's overpriced. The stock price is overpriced. The company is great, exciting. Stock price is a different thing. It's overpriced. The last time that we saw this scenario was with Cisco. Cisco most definitely had the best technology in the time when we were building out the internet. And the market just got carried away. It was just so in love with Cisco. And the stock price, it became the most valuable company in the stock market. And it rose from not really being anywhere near the top of the stack not too long before. Does that sound like a familiar story we've heard recently of Nvidia adding pretty much at this point 1.7, 1. Excuse me, $2.6 trillion of market cap? Now, Cisco continued to grow, continued to operate really successfully for years. For years, it kept growing. But the stock price collapsed. Stock price is separate from the company. The company continued to operate. It was a very good company. Their technology was the best. It was clearly different than the rest of the marketplace. The world had to build out the internet. So revenues kept growing, but the valuation had gotten too high and the stock price collapsed below its value. But investors, once bitten, twice shy, they didn't want to touch the stock because it had caused so many losses that I'm sure these big hedge fund managers just didn't want to touch it because they had to explain to their investors how much money they had lost on Cisco. So for a long time, Cisco just was undesirable, untouchable from many investors, and it just didn't go anywhere. Eventually, it did rise, but it's never gotten to the stock price that it originally attained. What's Nvidia going to do? I don't know. For all I know, it's going to keep going up. That would be incredible, but the stock's already been incredible, so they're in the incredible zone. But if they do fall off a cliff, it will become a falling knife because especially the big investors, once they start leaving, they are not going to return. And big investors pour big capital into these stocks. You don't get to $3 trillion of valuation with just retail investors. That's just not the case. You get there with big institutional investors putting big bets on these stocks. They certainly have been doing that with Nvidia. As soon as those start leaving, I think a large number of them will leave, and the stock price will really have a hard time staying at $119 per share. These are all things that we'll have to let time tell us which is going to happen. Is it going to go down or is it going to go up? I'm going to keep my position open on Nvidia. I think the story that I was seeing 3 months ago, I just feel more comfortable, confident that that's the story that I was seeing, and that's the story that I see today. And I think there's more evidence that this stock price is going to have to get corrected at some point. I think more and more experts in the media space are beginning to cite that, hey, this stock price has gotten carried away. And we'll see how the next 2-3 weeks play out. This is my update on my Nvidia short position. I hope you found it interesting, and I'll record another one in a month's time. We'll see what happens in the next month. For all I know, it'll go up 30% and I'll sell, or it'll go down substantially. And maybe I'll sell because I just want to take the gain and move forward. My last two shorts have gone really well. I made 52% on Super Microcomputer, and that stock's really, really hurting. It's a falling knife. And I saw similarities there as Nvidia, but it's different. They're a different industry. They're not as profitable as Nvidia. They don't control IP like Nvidia. And the other one was CrowdStrike, which I thought was price for perfection. If they would have one error, the stock price would go down. And boy, did they commit one error. They created the biggest computer outage in the history of computing. So they got the championship belt for making the biggest blunder in the security space by providing a very poor update. And that ended up being a 42% gain over the course of 10 days, which was great. We'll see where I end up with Nvidia. I may end up with a loss, I may end up with a gain, but it's certainly been a really interesting play on Nvidia. I'm For the most part, I'm a long-term investor. I like buying great companies and holding them for a long time. I like to see those investments double in value every 5 years or less. No problem with a stock doubling in 6 months. But I'm a long-term investor. But I analyze companies, and I'm putting the analysis that I had on Nvidia, and I've tracked Nvidia for a long time. I was an investor in Nvidia years ago. So I'm putting that analysis to work, and I'm putting capital at risk just to make sure that, I guess I know I know that my analysis is going to either produce a gain or a loss, and it's going to give me an opportunity to learn something. So that's a part of why I'm shorting this stock and I've shorted other stocks. Shorting stocks is not the principal investing uh, idea or discipline that I follow. It's really long-term investing. So I hope you enjoyed the video, and I really appreciate you watching. I'd appreciate comments on NVIDIA and see where you're at with the stock, what you think is going to happen. I'd really appreciate if you could provide a comment there. Good luck investing in 2024.